Hi everyone, welcome to the Mighty Trades channel. My name is Johar and welcome to another episode of Global Market Outlook. Last week was a very difficult week. All indexes largely crashed. If you look at our own market, we saw a deep correction of 4% in 1 week. We have given a closing below this major support line of 16,600 and even 16,800. Both of these levels were supposed to act as major supports. Now let's see, we might possibly be looking at retesting our previous low at around 15,800. I do believe that this entire support zone that we have here should act as a major support for the market going forward. I don't believe you should correct more than this, but let's see what happens. Let's look at a few global factors that can affect the market. So starting with the crude oil prices. Now the crude oil prices have moved up last week. As you can see, they moved up by 6%. Again, not a good sign. If it gives a closing above $114, we can again go them climb back up to 130, 140 US dollars. This will largely depend on what the European countries do with regards to the US oil embargoes, etc., which they're planning to put. Also, the OPEC countries in the Middle East have refused to increase their productions. The reason for that being that they are making a lot of money right now, because if you look at the long-term chart structure of crude oil, for many years, for at least since 2015 onwards, oil companies have not made, or oil producing countries have not really made any good money over the last 5 years, especially during the COVID crisis, where the oil prices went down to like $10-12 a barrel. So like this time when the prices are above $70-80 a barrel, this is when they make the most amount of money, and I think they are just trying to milk this opportunity as much as possible. So there we are looking at a prolonged time when oil prices might be high, something like how it happened back here after the US recession in 2008. You can see that the oil prices crashed, and then when things started recovering again, for quite a long time, from 2011 till 2014, oil prices stayed in a range of between $120 till $80. So for 4 or 5 years, the world went through a pretty high inflationary period during this time. So that's the view on crude oil. Crude oil is looking to go up, which is a negative for the market. If you look at gold, gold is trading in a range, so but it is trading with a positive bias. So if you look at the RSI, we can clearly see that the RSI has constantly stayed above 50. It's not gone below that. So it looks like gold is consolidating and possibly getting ready to move up. I would only be comfortable with gold if it goes below this 1500, below 1800 US dollars. Until then, there's a very high chance it might break out from this downward resistance trend line and start moving up again, which might spook the equity markets a little. Now, looking at the main root cause of the problem, which is the US dollar, which is currently at its all-time high level right now. So if it breaks this resistance zone of 103.6, then dollar will go into an uncharted territory, and this will put a lot of pressure on other currencies across the globe, even India, even China, even all the other emerging market economies. So everything is going to get basically expensive for us. Whatever we import from foreign countries in US dollars is going to get expensive for us. Whatever we export in US dollars to other countries will become more profitable for us, because if for the same dollar we can get more rupees, then that's good for exporting companies. But for companies which are importing, it's going to get more expensive, because more rupees will buy fewer dollars now. So it's going to be a challenge for all emerging market economies, especially even India. So this is not a good sign for the equity markets. If you look at the US 10-year GSEC, which is the interest rates in the US, those are also at a 52-week high level right now. The last time such a massive spike in the interest rates came back in 2018. So we could be looking at a slight more correction, I feel, because a lot more money will move over to safer debt funds, where big institutions can easily make a 3-4% return instead of taking a lot of risk in equity markets. Let's take a quick look at some global indices and try and see how other markets are faring. So let's look at Asia first. So if you look at Japan is also in a downward trajectory. It's correcting slowly and steadily. However, for the last 4 weeks, it's been largely consolidating here. So Japanese market is holding on since 4 weeks, but it is in a negative bias for sure. So it has a strong support at around 24,000 levels. So we could see it maybe retest this level once. If you look at Hong Kong, a lot of things happening in China, inflationary pressures, etc. are there, but they are also going through these lockdowns, and it has given a closing last week below this support level that it had. So I think we can see a further correction in the Chinese market, maybe down till this level of 18,000 as well, which is the next support now. 18,000 or over here 18,300 levels. So let's see. The Chinese market does not look very promising as of now. If you look at the Turkish market, this is also largely consolidating for the last 3 weeks. It's currently at its all-time high level. In fact, this is the market which has not corrected even a bit. So let's see what happens in the Turkish market. It looks poised to fall now. I think it's going to correct up to 2,100 levels. So that will be a correction of approximately, let's say, how many percent from its all-time high? Approximately 12 to 13%. So the Turkey market can potentially correct from here going forward. And if we look at the Taiwanese market is also not in a good space. It's been correcting sharply since the last 3 months, and now it's come to this strong support zone over here. I think it might break this support zone because it's not made any reversal candle like a doji over here, or like this bullish engulfing candle here. Let's see, next week we might see a bullish engulfing candle, and that would mean that this support has been respected. If not, then the next support directly comes in at this level for the Taiwanese market. Looking at the European markets are also not in great shape. France moved down last week by 4%. Germany moved down by 3%. UK moved down by 2%. So all the European indices moved down. They have been moving down since in the entire month of April. You can see that it's a rounding from the top. So this is not a good sign. Same thing for Germany, a rounding from the top. And pretty much the same for UK as well, a rounding from the top. In fact, UK I think has made a double top pattern. If you look at the line chart, we can clearly see two equal tops, and this is the support. So if this bottom of the double top is broken, then the UK market can potentially fall down till 6,400 rupees levels. So again, let's see, if this bottom is broken, then the UK market will see a deeper fall. If not, then the UK market will pretty much then I think continue consolidating above this level. If we look at the overall European market, which is the top 600 companies listed in Europe, then that index is currently trading at a very strong support level. So this high you see here is the pre-COVID high of the entire European stock market, the top 600 companies in Europe. So it's trading there, and last week has been a very, very strong bearish candle. Let's hope for a similar reversal that happened here in March. Let's hope something similar happens next week. Otherwise, if this index is broken, the entire European market will continue to fall then. So let's just pray and hope that things improve in the next week. Now let's look at the mother market of all, which is Dow Jones. So we have been clearly seeing a correction for how many weeks now? 1, 2, 3, 4, 5. For 5 weeks we were going through a deep correction. Last week was the 6th week. It's largely consolidated. Last week there was a huge green candle, a huge red candles, but the index stayed where it was. Now it's close to a very important zone of 32,462. This zone has been respected twice now. In fact, 3 times. It was once respected in in the week of February, then once in March, and now this is May, the third time that this has been being tested. If this is broken, then the US market can further correct to 31,000 levels, which will obviously drag the Indian market down as well. So Dow Jones is at very important levels. Let's see what happens. It might consolidate next week or give a slight pullback to these levels, but I believe over the next couple of weeks we might potentially see the Dow Jones index move to 31,000 levels, and if this is broken, then it will move to 30,000 levels, and I think this is where the actual market will stabilize and it will start moving up. I think it's a correction that we might see going up till 30,000, maybe by August or October levels. If you look at the S&P 500, then this has already broken the major support of 4,167, this line over here. So first support was broken last week. This support was broken in this week, and now it consolidated below this level last week. So this is definitely not a good sign. I think we can see S&P 500 fall down to 3,900 levels, and I believe this will be broken eventually, and it will go down to 3,800 levels, where the market will eventually stabilize. If you look at Nasdaq is in deep bear market right now. Its next support is directly at 12,250, and after that at 10,800. I believe the US market is going to go through this correction. There are very important supports that it's breaking, and it's going to be something that we are going to have to live through and see through. But this is probably a healthy correction. Nasdaq has gone into bear market, but if you look at the other indices like Dow Jones, etc., if they fall down to these levels, like for example, if it falls down till here, that's just a 14% correction, and over here, then this is just a 17.5% correction. So that means that these are not going down in bear market territory. Definitely, I think this is just a correction that the market has to go through so that things get better going forward. So the market's already corrected by 15%, and if it goes down to this level, the next support, then it's an 18% correction, and if it goes down to this level, then it will become a 22% correction. Now this, according to the US definition, that if an index goes below 20%, then it enters the bear market. So I don't know, it might technically, people might say, okay, the US market has entered bear market, etc., but we should not believe that. I think this is a healthy correction that the market is going through. It's given a strong run up. Taking a correction of 20% will ensure that weaker hands get out of the market, and then the strong hands can then take up the market. So I believe we are in for some tough times going forward, but I think we just have to be careful of what positions we are taking, control our position sizing, and then continue moving ahead. Now, looking at our other stocks, I'm sorry guys, just give me a minute. I think I need to plug in my battery. Yes. Sorry about that guys. So yeah, as I was saying, we'll have to be courageous, and we will have to be careful of our position sizing and ensure that we are only sticking to strong stocks. This is the correction the market has to go through, and we have to live through it. But there is always going to be a trading opportunity in every type of market, so we just have to be ready to grab those. Now let's take a quick look at our own indices and see what's happening. So if you look at the small cap index, not a great sign here. I think in small cap index you might see some more pain going forward, and largely the market is mostly small cap and mid caps where we are invested in. So be ready to face the music and keep your stop losses ready. If the stop loss is hit, please do exit on time. You don't want to get stuck with a stock which might continue just correcting further on. Mid cap does look better than the small cap index. If you see, the small cap index is close to its 52-week low right now, but the mid cap index is still above its previous support. So mid caps are definitely looking stronger, but you could possibly see it coming down till here in the future. Metal index has also corrected quite a bit by 4%. So metal index has also broken this support line over here, so this does not look good. Bank Nifty also is not looking great, and if you look at Bank Nifty, it's trading in this downward channel very clearly, what we can see here. If we connect all of these bottoms this way, this looks like a downward channel that Bank Nifty is going through. So this is not a crash, this is a correction, and every time the index comes down here, you can probably take some position in some banking stocks or in the option, index option, and then sell it at the top. So you can keep playing in this, so you can make money in these type of markets as well. But overall it's going to keep down, but it's going to go up down in a zigzag fashion. And so every time it makes a downswing, you can every time it makes a downswing, you can buy it at the bottom and then hold it for the upswing. That's how you could trade. So the same channel is going around in Bank Nifty. PSU banks are going through a very large consolidation phase, I would say. They have been the PSU bank index has been consolidating in this range since November. So if it comes down here and it takes support like it has done twice previously, then you can enter some positions in PSU banks and then set it up again over here. The entire range of this move at the index level is 22%. So at a stock level, it will be probably 30% and above. If you look at the Pse Index, the Public Sector Enterprise Index, now this chart is looking the strongest actually. Out of all the sectoral indices, you can clearly see that this has corrected the least, right? Last week the market fell by 4%. This index has moved up by 0.41%. So something's cooking in public sector enterprises, and you should definitely keep a watch on those stocks. I think the government companies are going to outperform in the next couple of months. However, you should be cautious, because if you look at the line chart, then there is clearly a double top that has formed over here. So if it breaks this level of 3,800, then you will see a deep correction in the Pse index as well. So please make sure you keep that in mind. Keep a look at all these parameters, because the market is really tricky and volatile right now to take any safe positions. IT stocks not doing well, broken major support since the last 3 weeks. It's continuously in a downtrend. You might see a small pullback rally in the next 1 or 2 weeks maybe, but don't go aggressively long in IT stocks. I think they're going to correct at 27,000 to 25,000 levels. This is an entire zone where it can correct to, in my opinion. FMCG stocks have been consolidating for the last 4 weeks. I think if the market crashes further, then FMCG stocks might be a safer haven to invest in, because no matter how much inflation happens, how many wars happen, whatever happens, we still need to eat, we still need to have a bath, we still need to brush our teeth. So all these things will continue happening, and FMCG can be a safe haven. So find the strong stocks in FMCG sector and you can continue building positions there. Media stocks, deep correction for the last 4 or 5 weeks. I think they've corrected more than the market. It's better to avoid media stocks right now. If you look at the infra sector has also corrected similar to what the market has corrected. So nothing major happening here. It's following what the market is doing. So I wouldn't say it's overly negative or overly positive. Real estate has corrected more than the market. So the Nifty 50 corrected by 4%. Realty stocks are corrected by 8%. So something definitely not right over here. Let's see, it might take support at 390. If it does, then that will become a double bottom pattern, right? If you look at the line chart, if it does take support here and moves up, maybe next week if you see an up move, then this will become a double bottom pattern. And according to that, if a breakout happens on the index level at 476, then you can see this index move up to its previous resistance of 560. So let's hope the real estate stocks or realty index takes support over here. But if it breaks down further this, then you should probably exit all your real estate stocks. So this is definitely correcting more than the market. If we look at the auto industry, then this has also corrected by 5%. So just 1% more than the overall market. So it's been consolidating in this range since February last year. So I think this is a pretty strong support for auto stocks. let's see what happens. But I think we should not be too worried about auto companies. I think they're doing pretty okay. Energy, as I've been saying since the last couple of weeks, has been on a complete and massive bull run. I think energy stocks are doing extremely well, especially government energy stocks are also doing extremely well, like Coal India, NLC India. So these are doing extremely well, and you should definitely continue holding energy stocks. Whenever they come down, you should definitely add more positions. As you can see clearly that every time a downswing comes, it moves up, downswing comes, it moves up. So it's clearly making higher highs and higher lows. So until and unless the previous low is broken, I don't think you have to be worried about energy stocks at all. Consumption is also moving down, very similar to the market. So pretty much the same as how the market is behaving. Finances, this has moved down much more aggressively, I would say, than the market has moved down, and coming to very close to its previous support. So we can probably see a deeper correction in finance. Pharma is also not looking that great. It's been correcting since July of last year. So pharma index is not looking good. There are some specific stocks like Sun Pharma and Laurus Labs which are doing better, but overall, if you see other pharma stocks like Granules, etc., they are in very deep correction right now. If you look at the entire broader market, which is Nifty 500, then it's corrected by 4.5%, very, very close to this support zone here. This is very important. We have to watch out that this is not broken. If it is broken, then we can see a much deeper correction in the broader index. And as for our own Nifty, as we have seen this chart many times, we are in a deep correction phase. I think it's going to correct till 15,500 in the next 4 to 5 weeks. So let's see what happens. And the market is looking in a mood to correct right now, I'll be honest with you. And we just have to keep a watch on our stock specific actions and exit whenever our stop losses are hit. Please don't get trapped in fake pullback rallies, etc. Be very careful where you're putting money, and keep your position sizing low. If you were taking a position of 1 lakh rupees in one stock before, cut it down to half to 50,000 rupees. If it turns out to be a very profitable position and you are like, okay, I only put 50,000 rupees, it's okay, as take the whatever profit you can, because when you make a loss, you could also make a less amount of loss compared to a higher amount of loss before. If we look at the Indiavix is also at a higher level right now. For the last 4 weeks, it's been moving up. I think we'll see a higher volatility going forward for the next 3-4 weeks. And USD INR gave a close at its all-time high of 76.84. This is very negative for the Indian market, and I think things are going to get much more expensive for people in India, and equities are going to get much cheaper, because I think we'll see a correction coming in the equity market because of this. There is huge FII selling happening. There is a huge demand for dollar. A lot of money is going back to the US dollar, so we are potentially going to see a deeper correction in the Indian market. So important levels to watch out for in Nifty is the first level is last week's low itself. So 16,350 is something that the index should hold. If not, then we will see a correction down till 15,900 levels. I believe this should hold. This should hold the market for this year. But if this is broken, then the next level directly comes down to 14,000 levels. So let's hope the market holds this level. Let's hope our domestic institutions continue supporting our market as they have been doing, and let's hope the FIIs stop selling, and let's pray that this the war that's happening in Ukraine comes to an end and people are safe and healthy again over there, and things can get back to normal. So in summary, the markets are not looking good for the next couple of weeks. You might see some pullback rallies in the middle. Make use of those to make some long positions. Otherwise, if you know how to short sell properly, then make some shorts. I think it's very easy to short this market right now. But overall, the trajectory is on the downside. So don't create too many longs and take very short-term trades in this kind of market. So thank you very much for watching this video, and hope you have a good night.